Well. Good morning, good afternoon, good evening. Doc here from North America, and so happy to be here with Dukascopy all the time. I heard another horror story where people use YouTube. They try to talk about the markets like I do, and being based out of the United States, they get beat up by YouTube. They get punished. They get turned off for 3 months at a time. It's so nice to be able to talk about the markets and not be monitored by amateurs. It's so nice. Anyhow, let's take a look at it and let's see what's going on. All right. We jump over to, that's what South African ran there yesterday. Let's go to the Swiss and see what the dollar is doing today. We've heard all kinds of stories about a week and a half ago on the Monday where the market dropped 750 points, and how much money came pouring in, like a little bit, $2.5 billion worth came pouring in, lifted the market up, and at the same time there are trillions sitting on the side. There's so much cash out there. So that is something to think about and ponder when you try to play the short side of anything. There's the fact check spreadsheet. There we go. And we're going to get the chat line up. Let's get that going too at the same time. And we'll see if anybody is here besides me, or maybe I'm in the nursing home and this is all a big fantasy in my head. It's one or the other, I guess. Could it be a fantasy? Could it be real? There it goes.
This high-speed portable Wi-Fi router is taking over the market in the US.
There we go. And now it's just me.
This high-speed portable Wi-Fi router is taking over the market in the US.
And so that is it. That's the action we're seeing. We're seeing the Swiss going down, which means the dollar is going down. Now that's, it's a very tight range. The markets are not moving that much. We can take a quick look at the dollar index and see how much it really is moving. I know it still stays, as you can see on the fact check spreadsheet, line, what is that? Let me find that line. And let's find that mouse too. And let's see, where's it at? Let's go with right there. We'll open that up. Dukascopy day week, and pop goes the weasel. There it is. It's open. Over on line, what is that? Line 25. Oh, there it is. Line 25. Let's amplify right there. You see, it's 2 days in the daily buy and 2 weeks in the weekly buy. It's not really going. It was down yesterday, but it was still in the buy. It's in the weekly buy, so forth and so on. So obviously, first of all, it's literally the deadest time of the year. It's the summer. July, last week of July, the first couple of weeks of August, they are usually really quiet, and then out of nowhere, I guess it's like the classic darkest before dawn, and all of a sudden we reach a top, or we reach a bottom, or we do something of that nature. And so, hey George, how you doing? Want to ask you a question later in the silver quant. We can look at it now even. You sent out. What is the additional bottom pane, please? Let's take a look at. I'm going to click on the chart itself that we sent out, and then I can see what you're talking about, and then we can go to a live chart at the same time. In other words, here's the live chart. Right? Is that it? That's a NASDAQ. There's silver. Okay, now let's go take a look and see what we sent out. Right there. Silver, 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 silver. I like to answer questions. I find it, it's a learning moment for me. Not just for you, but for me. It's always interesting to see what's going on. Okay, so this morning, at the time when we took the chart, it was this right here on the daily quant was minus. So we're giving you a warning that it's working into the daily sell. At the same time, we're in that weekly sell, so you have to be even more cautious. The bottom gas versus gas line, you can see it's hitting the manifold. Usually what we like to see is, see how the green line, when it pierces it, it becomes a topping pattern. Same thing here. It hits it, and it's a topping pattern. There's a high there right over that 2-day period, and it goes lower, but it doesn't make a new lower low. But that's the characteristic when the green line gets up to the bluish dotted dashed lines here on the gas. Okay, so now let's see what you said again. I'll read it over. Morning, Doc. Blah, blah, blah. Silver Quant, you sent out. What is the additional bottom pane, please? Okay, so you are asking about that. Hey, George. Hey, hey Moses. How you doing? Oh, sorry about that. Not only is it below, I didn't even put it up on the screen too. It's even worse. Right there. There we go. There we go. So, this is the panel that went out. Okay, and so the red line, dotted line there is giving you a warning because the daily at the time was down below, and we can show you that relatively live too. Let's see, where is it at? Like that. There we are. And so now, as the morning has gone on, it's still, I think it's minus by the hair. We're going to widen that out so you can see it dramatically. All right, and you can see the numbers there. It's on 0, 0, 0 now, and the plot 4 is on 0, 0, 0. When we took that picture right here, it was actually minus. Let's see if we can make this bigger. I think we can. There you go. And you can see the line and the histogram were just minus in there. So I threw a red dot dash line there. But you asked a really interesting question, and that is, what is the, let's see if I can figure out how to make this smaller now. Oh, yeah, right there. What is gas versus gas line? That's pretty much the question. I like that. That's gas. Now, the best way to describe it is, when I was young, I used to do this TV show with John Bollinger. We used to call it, he called it the Guru Review, he used to do, before FNN merged with CNBC. And I would be on there like every couple of weeks. And John and I would talk about like standard deviations, and I'd talk about all kinds of other things like the opening of the markets and, you know, where they're trading and how high and this, that, and the other thing, and my math a little bit. And this is back in the 80s. So anyway, I created a gas that was the golden ones here. Or matter of fact, what we can do now is we'll get we'll move that down, and we'll look at this. This golden line right here, where I'm lighting it up on the bottom panel, is the one standard deviation of my math. Okay, and so that's plot 2 and 3, just like this is plot 2 and 3 in the week. I'm sorry, it must be the weekly I'm doing there. So that's 2 and 3 in the weekly, and they are identical, really. So when you look at plot 2 and 3, you see 0.839 and minus 0.839, and up here it's probably the same. If we can get a hold of it. Now that one says plot 34 and 34. Okay, so let me just double check this. That's plot 2 and 3. That's 09 and 09. Okay, so normally it's about the same. It's very close. They're very, very close. These are very minute numbers to begin with. And so, as you can see, I mean, 0.0839. That's a tight number, and that's plot 2 and 3. And so this is plot 2 and 3 of gas line. Now, what gas line? The difference between the two is that gas line. Let me show you. It's better to do it visually. There's plot 5 in it, and we're going to make it a dashed line, something like that. Usually I make it red, which is kind of cool. And see how, let's see, let's contract this up and you'll see what I'm talking about here in a second. And there we go. See how the red can be on the top and go through. That's why I call it gas lines. And the green and the red are the gas lines, but they're mirror images, so there's no reason to run 2, we just run 1. So you follow the green line, or we could follow the red line. In other words, when it's going down, the red line's below the 0 line. Obviously, the green line is above the 0 line and it's going up. That's why we run the gas. We run the plot. I guess it's the plot 5, and we leave the plot 6 out. Or no, I guess it's the plot 4. It's the plot 4 That's what it is. It's the plot 4, and we leave the plot 5 out. And so, and you can see it right there. So the plot 5 is left out, the plot 4 is running. When you come back down to the gas, not gas line, it can't do that. So in other words, it only can do a 2 standard deviation compared to the 1 standard deviation of the time manifold. So it's 2 time manifolds, a 1 standard deviation time manifold versus a 2, whereas all the others just run the 1 standard deviation time manifold. Well, we find that when the green line gets above, it has natural instincts to represent a top, just like when it goes down below, down in here, and it gets through the time manifold. Usually that's the bottom, and you get a pop on it. In this case here, it got up and then started to break down and broke the line again right there. Let's see if we can put a line in there. Is that the same day it started to collapse, or the day before that it started to collapse? I think it's the day that it did collapse. Let's do this, and this, and this. Yeah, so you can see here, the day before, all of a sudden it started to shift when you saw that. At the same time, this is the weekly too. We're looking at a weekly indicator here, not a daily. Whereas the daily made you be aware of it from here, as this was rising, and you hadn't gotten through the 0 line. You know, it's just giving you warnings. These things all have nice characteristics to follow. You know, they're consistent over and over and over again. You know, and they're really solidly consistent for decades. Okay, so I hope that helps out, George. But if you have more questions, please do not be afraid to ask, because I've said it over and over again. There are no dumb, stupid, ridiculous questions when dealing with money and trading. All there are is short answers or long answers. That's it. And you just saw a longer answer because it was a very, very good question. And so basically the bottom one, I use it for my intraday trading. Let me just show you how nice it is. I've done this before too. People have seen it. That's why it's starting to become more prevalent in my work. You're seeing it right there. So like here is the S&P 500 on a 639 tick chart, basically, or contract chart. And you can see I run the gas line here, and I'm running the gas here, and you know, I see that bottom in here. I see this coming through, and I'm watching for the histogram to get going. You know, right there. Now in this case here, it was at the top of it, but I knew that there was strength coming up. I saw the green line. I saw a volatility signal, another volatility signal. Remember, this thing's ticking away live right now. So, you know, it's active, you know, and you can see here it's breaking down now. More than likely this product will find a way, you know, when this thing closes below the time manifold here, the green line, it's going to start to get pressure. Now, once we get that histogram minus, it will go down. If it doesn't go minus, it's going to go up. So, all right, now Alan says, hey, Doc, hey, how you doing? Oh, good, our options report. I love that. What's cooking? Let's see what you got here today. Yen, okay. This morning, the call options, $1 billion of open interest at 109.50. Okay, and 632 million at 11 in the. Oh, really? Let's put the product up there, because I know that we just held on the daily. Where was it? The daily buy by the hair of its chin this morning. We will find that button to push. Where is it? Okay, there it is. Let me just put this back. And we can look at something more volatile. Just a quick one there. You see here, there's a more volatile one. Not sure why the dots are the way they are, but that's all right. You can see here where it breaks down. You can see the warning was right there. It got through the second standard deviation, the green line. Now it gets below the time manifold. You know we're having pressure. We've got red and green dots. Now we're getting a volatility situation right there. You can see it sold down. The product, when it broke, closed at 15,122.75, and now has traded down as low as 118.75. So 122 was it? Yeah, so it's gone 4 points, over 4 points. So that's $80 on a one lot. No. Glad to answer, and if you have any other questions, you fire it out. That's how we all learn. Trust me, I learned just as much. There's something I always pick up on it. Robin used to tell me about something on my math, a characteristic that I started to pay attention to. It was a very good trading tool over time. I started to realize it was. It took me half a decade to pay attention to it. I mean, there's so much math opportunity in here. There's so many characteristics that, that's why I like it when someone asks about it, and if someone 10 minutes later now asks about silver and wants to know something about it again, you never know what we're going to spot. You just never, honestly, you never know what we'll run across. Now let me get to the yen for Alan. Where did I have that parked? I have it parked around here somewhere. Maybe it's there. Ah, there it is. Dukascopy Day Week Forex. There it is. Okay. So, and let's go to the yen. We have a yen for the yen. Yeah, so this morning at one point it wasn't through there. When we sent out our charts this morning, it was still plus. Let me just show you that, just as a good example of what's going on there. How these are live markets and the action is always occurring. And if any of you are out there or are part of Chicago Client, you're always welcome to contact Robin. He'll help you out and let you see a fresh chart or something like that if you need it in your middle of trading. Yeah, see, this morning we sent it out. It was still just representing a volatility line. And we knew that there was problems here because of the weekly being down below like that. But now we're really seeing the weakness. You can see it here. It's broken below it at the moment. And so we'll see how long that lasts if we end up going into a daily sell. Now, let's go to Alan's thing. There's the 111 right there. That's the puts that he's talking about. And the calls are the 109.50s. And we are just starting. That was like literally right around in here. So it's trapped in that range. Alan is saying that there's about $1 billion of the call options. Someone has a strangle one. And about about 632 million in the puts at 111. So on Tuesday, 830 million, 110.65.70. Wednesday, 750. Yeah, so they're strangling this thing right around the 110.5 or 109.5, 111 area. They're the collars, I guess you could call it, like a collar on a shirt, or the collar on your or like cuffs on a shirt, or handcuffs. Either way, they're trying to protect their position. In other words, they've got it locked in where they're not, and because they have it locked in like that, it may keep the markets kind of sideways for a little bit. Hey, Middle Age. Let's see, Middle Age says Euro looks to be getting stronger against dollar. I think they're flirting with the sell again today. Let me go find it. Oh no, okay, yes. It went into the buy yesterday. Yeah, we have it as a 1 day in a buy, and it's starting to lift. I want to see the weekly get going. That's what I'd like to see. If we don't see that weekly get going, it's just a dead cat bounce, But it does look like it. But then they've really beat up on this thing, because look where they started off with the weekly sell, back in this area, back up in here in that week, right in there. They started the weekly sell. That's where it settled that week, and you can see they've clocked this thing from the 122s down to the 17s. Now they're, obviously they're trying to lift it up again. We've seen it before, but this time they're doing it much better. We got some green candles or green dots. As a matter of fact, let's do that. Let's check on the J4X and see. It's probably showing us the hinkies have got to be green at this point. Right there you go. Yeah, you can see the hinkies. Let's see what it shows, but yeah, there you go. You got two green hinkies at the same time. The white line is piercing through. We're seeing some strength in there. I agree with you. There's some action coming. So let me just go back to the chat line again, because I keep on getting my Olympic information. It interferes with the chat line. Okay, there it is. So let's see. Welcome to. I am waiting for the weekly to cross. Yeah, me too. if that thing crosses, you might get it pop back up into the 121, 122. It could be a nice little move there. I'd like to see that weekly, join in, and I don't know. This is such a bad time of the year. These 3 weeks, and it's like the from the November to the late November to the December time period, where the markets are really, really sloppy, and really, I'm amazed that our math does as well as it does in these time periods, because it's just very thin and slow, and anything can move a market. And we know nowadays that it's nothing for a market to get moved, and then a couple days later it just cranks back up again. So let me see. Ooh. So that is that. I just want to say again, I agree with the euro. I want to see what they do with that. All right. Now I'm trying to think where my head's at, since I'm answering a text at the same time. Let's see. So there's the euro. All right. So let's see what I know. The cables jumped in a day ahead of time. I thought that was interesting. Seeing the cable show the strength like 4 days back with the volatility signal, and then this, and you can see the weekly looks the same way. Maybe they're all going to make a move. I want to, in a normal world without QE. Everything everybody's saying makes sense. And in a world with QE, forget about it, as they say in North Jersey. That's what the mob says. Forget about it. It's like, honestly, I mean, there's no way to really describe what, in a QE world, there is just trillions, literally like 3 or 4 trillion sitting on the side, just waiting to jump into the market on any weakness. People don't understand that sell-off back in February, March of 2000. They think it was like, the Fed stepped away or something like that. No. What they did is they let 5 volatility funds who had made billions off of the Fed's back, they allowed them to go bankrupt. Can you imagine how bad they have to feel even to today, where they had made billions of dollars, like $3 and $4 billion from, playing with, betting that the Fed will never let the market fall, and then the market got panicky, and the Fed didn't step up, and just one day, when you're selling option premium, or it's even binary premium, well, binary premium is safer, but you're selling naked option put, the only way you can hedge the market is to short whatever you're selling the put on, and it doesn't matter what price you get. So in other words, you're willing to sell anything and everything just to flatten out your position, hoping that it stops and goes back up, and your volatility falls apart, becomes cheap again, and then you're the winner. They were selling from 2009 all the way up until 2020. 11 years they were selling. They used to call it free puts. Oh, the Fed gives out free puts. The Fed gives out free puts. And so most of that fall came from those 5 volatility funds. They're the ones that were jamming the Dow Jones Industrial Average up and down 1,000 points in a day. The Fed just stood to the side and said, okay, we'll let this clean itself out. Then you remember Doc said the funds, 3 of them went out of business, 2 of them were closed, like smartly closed, and only lost like, $750 million or $1.25 billion. And then a couple of them went out of business and went bankrupt. Those managers will probably not ever get jobs again. And they lost, I don't know, $6-7 billion, $8 billion, something like that. And the Fed just watched them just melt. So the Fed will step up like it always does. But when they want to let something fall apart, they'll let it fall apart, and then they'll step up. And so that's where we are always. That's the way the whole market is. All right. Now, middle age. Let's go take a look at your coffee. I leave that up in the system so we can go take a peek at it. Right there. There's the tags. Tags has not updated yet. Let's give it a refresh, but tags is not updated yet. Just closing the daily buy there yesterday. Whereas coffee, ooh, that might be today. Yep, that's today. So they're just selling a little bit off, nothing major. But Robin's convinced it's going to $3 on the futures contract. But he's been saying that since 2.25, so he's been very, very, very right, or maybe $2 even. You know, you can see here the daily is trying to push down at the moment, but look at the weekly; it's still higher than yesterday, so it's still lifting. You can see the GAS 7 is still lifting. It's not even attempting to break down. Look how high that is over the dotted blue line. Look at the way it rode that all the way up and then finally broke, and then you got your break here. We'll wait until you see the green line here break down the blue dashed line. Then you know that they've kind of topped out in the coffee arena, you know. All right, now I'm going to go to the Turkish lira, but please, 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 if anybody sees anything they want to talk about, I will stop and we'll go look at it. There is the Turkish lira. You can see today they're trying to push the daily up to match up with the weekly in the dollar Turkish pairs trade. Over in the Europa Turkish pairs trade, let's check that out. Right there. You can see same thing is happening. The daily is perking its head up, and it's looking pretty clean there. And we're getting a white line starting to pierce the time manifold there. I wonder what, let's see. The Delta variant will shut everything soon again. No, it's not. It's not that bad. I'm seeing it in Australia. Yeah, I see that they're trying to lock you guys up again. They're talking about it here, but we're not letting them anymore. We're tired of this stuff. This is the flu. It's just a very nasty flu. I know the Delta variant. I just wrote something about it. The Delta variant has something like an 8-to-1 contagious rate. It's a very aggressive contagious rate. But the death rate is enormously low. This is just the politicians sinking. You know, our Democrat machine has to do something. They just have to do something because they're getting their heads handed to them. They keep on losing elections. If it wasn't for them stealing the election from Trump, people might be talking about a death epidemic for the Democrat Party in the United States. I mean, they have not won anything but the 2 elections they stole in Georgia, you know, when it came to the 2 senators, and that they've changed the laws. You can't steal anymore. The Democrat Party is going to disappear the way these guys are going. And this Delta variant, like I said, has an 8-to-1 ratio of contagious. You know, one person can infect 8 people. Problem is, the death rate isn't just not there. And I would say the Chinese more than likely designed it that way. They knew that if they dared to make it look like a real chemical weapon, they would be in a very bad place. So just making sure people get sick is okay, but as long as they don't die. And you can remember, people, if you want to believe all the numbers, then you've got to believe that COVID-19 is a cure for cancer and a cure for heart disease, because last year we had 90% of the people that normally die from cancer and heart disease did not. Instead, they died from COVID. So heart disease and cancer patients, you know, were almost minuscule, only 10% of the normal yearly event. So if you want to believe their numbers, also believe that it's a cure for cancer and heart disease. And yeah, I know. I talked to a few people in Australia, and I feel sorry that they're doing that to you guys. Oh, Middle Age says I think we'll hit 3 by March of 2022. Yeah, Robin used to write for one of the brokerage houses for a bunch of years on the softs, and I don't know if he used his name. He may have towards the end, but I think they just used the brokerage house and say, you know, this is, you know, First American or whatever, whoever it was. And yeah, he did the 4 softs. Did coffee, cocoa, sugar, and cotton. And he says he's been saying to me for, you know, since $2 area that's going to 3. I agree with you. All right, where did we leave off? Oh, that was a Euro Turkish lira is even showing life in it again. Now let's drift over to the Canadian. And there's the Canadian. Oops, I just realized something. I need something to send something out. Doc needs to send something out, and you guys can see it at the same time. This is, there is, let's save that. That is the gas company. You know, I forget the name of it at this point. But let's save that. Got to send that out. Yes. And then we've got to send out the Exxon Mobil. Yes. Look at that. The weekly's trying to lift up in that. And that's another yes. Right there. And then I forgot to send that out. And then there's Amazon. Look at Amazon lifting up again. It's up a little bit firm. They didn't confirm about the Bitcoin on Friday. I mean, not Friday, yesterday. But they did say not yet. That's how they said it. Not yet are they going to accept. So they're insinuating that they are going to accept probably cryptos for payment over time. That's why they were trying to hire a manager. Matter of fact, I got an email from them. They emailed me. You know, just a general one. It was not anything too personal, so it didn't matter. But what was that? That's the gold. Let's just do this. Refresh that. But yeah, I mean they're definitely thinking about it more seriously, the cryptos, and I understand that, you know, because the news came out that someone in London had said that they you know, had not yet decided what to do. It didn't knock down. It only took it down about 6%, where it was up 14% yesterday. So you know, that's just another thing going on there with the cryptos. As far as I'm concerned, cryptos are a manifestation of QE, and no one wants to say that out loud. And that's what the problem is that if we didn't have QE, we wouldn't have cryptos, as far as I can tell, because everybody would go to silver and gold and so forth, you know. But due to the fact that we have cryptos, well then what happens is that we get, that's what we get. That's exactly what we get. So let me grab this like that. Yep, that's exactly what we get. And so that's a conversation that needs to be had, and no one talks about it. You know, when you hear people talk about cryptos, you know, and they do it in like a code way. They say stuff like, you know, don't you think something should be competing against the central banks? It's like, yeah, definitely think something should be competing against the central banks. And that's exactly it. Is no one says, oh, by the way, since we have QE, quantitative easing, we have cryptos. And that is really the gist of it all. All right. Now, let's see, where do we leave off from here? So there was silver's up on the screen, and we got Euro up on the Chicago on J4X. Let's take a look at cable real quick. I just want to see how it looks on there. What we're going to do is we're looking at Canadian at the moment. So let's go back to the Canadian. Where's my Dukascopy page again? Got so many things going on here. This is really cool. This is cool. Cool beans. Is that it? No. No. Let's minimize that so I don't go after it again. And it must be right there. Where is it? My Dukascopy thing. Team USA settles for silver in gymnastics team final. All right. We know we have it around here somewhere. There it is, right there. And there's the Canadian. Let's see what it looks like on J4X. Right there. Now, Canadian, you know, it's been in that sell for a couple of days here, but it really hasn't gone anywhere. And, oop, yeah, you can see that. Oh, there goes the mouse. There goes one of my mice, just ran off on the floor. And let's see if we can show it right here. as you can see right there. You can see it right there, can't you? Yeah. You see how it's basically, no, it doesn't, the mouse is not showing up there, so we'll do it here. There it is, right there. It's showing up there. And then at the same time, you can see on J4X, it's burying itself. You know, red bars, the white lines well below the dashed lines, just hanging out down there at this point, trying to find the bottom to turn back up again. And you can see here on Chicago Quant, same game is happening. It's trying to find the bottom. It's turned up, and it's getting ready to try to break the line there. You know, the zero line. You can see we've been in the weekly buy for a bunch of weeks. So the trend has been y'all friend. Let's see what else. I guess Alan, you can't say anything about the Delta variant, or someone will probably like lock you up. They're probably monitoring our. They're probably saying, "Where's that DocDow?" They're probably looking through Lafayette right now. Australian paratroopers have jumped in secretly in the woods, and they're probably like looking for DocDow in Lafayette, in Riga right now. Where is he? We want him. He's saying that the Delta variant is not as bad as we tell you it is. Yeah, all right, an 8-to-1 ratio in infection rate. Yeah, I agree. It's high, but the death rate is enormously low. So you got to chill. Chill. Everybody catches the. You know what's funny? How many people, I wonder, think about this, that they take a flu shot once a year, right? And for some reason they want the COVID shot to last forever. It's the flu, people. It's the flu. Oh my God. You know, I mean, you line up again next year and get yourself another flu, COVID-19 shot if you want. It has a degrading capacity, I understand. Some Israeli study says. It's like, yeah, all these flu shots have degrading capacities. You have to go get another one a year later. I mean, that's what it comes down to. That's why I was a big fan of the Johnson & Johnson. One shot once. That's it. I mean, for the year. And if you want to get it again, then you get it again. I mean, it's going to have variants. They all do. Every year the flu has a variant. It's the flu. It's just a high-powered flu that has a infection rate of like 3.27 or I think it's 3.21 people to one. So you're the one with the COVID-19. You could infect 3.21 people. So in other words, if you're so that's 5 times. So imagine 16 people that you met up with 5 times. That's basically what it comes down to. Or like 100 people, but 16 of them are going to get it. That's the way you really look at it scientifically. You meet up with 100 people, and out of it, 16 are going to catch it. But are they going to die? It all comes down to their circumstance. Obviously, if they have heart disease and they have cancer, they're going to be like wanting to give you the tongue. They're going to be like, I want it. Infect me, will you? Because I got cancer, and I hear that 90% of the cancer patients don't die now because of COVID-19. That's right, they die instead of COVID-19. So yeah, they want to exchange spit in the shower, you know what I mean? All right, same thing with the heart disease people. All right, where are we at here? So there's Canadian, and what else can we talk about when it comes to the Canadian? Imagine it's flatlined. So I mean, you got to imagine the oil has to be flatlined. Let's take a look at it. We'll take a quick peek on J4X on the oil first, and then we'll go over to Chicago Quant and look at the oil. Where is it at? Earl, light sweet, right there. Yummy, sweet oil. Kind of like something you could dip bread into and eat. Okay, now here you can see this thing's been moving up with the candles, but look at it's flatlined in a sense right here the last 3 days. And then, see right there, maybe? Yeah, right there. Then let's take a look at crude oil on the Chicago Quant, the same way. And there it is right there. Flatlined, see? Just like, well, it's like here on the J4X, it's flatlined. Now where is our dots? Why did they do that to me? Reloading. Give me my dots. Where did my dots go? I don't understand. Where's my dots? Where did they put my dots? There they are. So you can see here it's been in the buy. And it's lifted up on the J4X. It's in the buy. It's following right along with DocDow's work right there. It may be 4 to 6 hours older or lagging, but at least it's something you can look at when you're not talking to Doc. Let's see. What else have we got going on, guys, gals? Let's see. That's oil. Let's take a look at gold. But that pairs trade is definitely doing the same thing as the oil is. That's what it's doing there. Now gold lifting up its head today. Hooray for us. Did we catch that? Yeah, I guess we did. It's got a green line in there. So when we sent that out this morning, let's see where that's at. Whoa, that looks bad. What did I just do there? Pushed the wrong button. Let's go back to the gold. Let's put it up on the Chicago J4X. One of the above. I do J4X and both. Right there. There's the gold on the Dukascopy's J4X. And then, let's find it here. There it is right there. And it's perking up. Let's go take a look and see what we sent out. Because I have the green line in there. I see that. Yeah, now this morning, okay, yeah, I was doing it there, but it had a red dot. That's why what it has now is there's no red. Oh, yeah, now it's a volatility. There's a red dot. See, that's hiding in there, right, on the edge there. But now we have a green dot. So that line should be moved over like that. It's starting to really kick. It's really starting to kick. Now all we want is to see this damn weekly turn up. Huh, middle age? You ready for that? Robin was showing me something yesterday, and I said it makes total sense. You know, it was about a triangle in gold and silver, and it was like going back about 3 years. And I said to him, yeah, you know, you can't hold something down forever that people, you know, invest in. And so one day, and 1 week, and 1 year, it's going to finally, the metals will get its legs. But I would have to assume by then QE has to be at the end of its road. It literally could be 15, 20 years from now. It could. It literally could. I know that we don't talk about this much. I do ramble about it here or there, but Mr. Bernanke, who created the QE, who wrote his PhD thesis on what went wrong in the Great Depression by the Federal Reserve and the government, he enacted QE, saying that that's exactly what they needed to have shortened the Depression. Obviously, that didn't work out too well, but that's besides the point. And then, sure enough, there's QE. And so what my point is, they have portfolios that have a lot of junk in them. They still may own, God knows, they may still own something like Lehman Brother bonds. But they own assets of probably the Exchequer, not the Exchequer, the Lloyd's of London, and they probably own some bank. Was it the Bank of Scotland? They probably own some Santander. They own a big chunk of Citibank in the United States. They probably own a good chunk of Deutsche Bank in Germany. You know, all the little players. They probably still own Bear Stearns bonds. They probably still own Merrill Lynch bonds. They probably own Wachovia bonds. You know, things like that. And supposedly, this is the point. Still, I'm making the point here. No. Let me make the point. And the point is that supposedly part of the philosophy was, if only back in the 1930s, the Federal Reserve bought bank bonds and bank stocks and put cash into those things, the Depression wouldn't have been so painful. And so he said, you know, maybe if they had a 50-year portfolio where they parked them for 25 or 50 years, well, now Bernanke talked about in 2008 a 100-year portfolio. Okay, so we all hear from retirees who leave the Federal Reserve. They say there's a rumor out there always that the Fed has a 100-year-old portfolio sitting with trillions and trillions and trillions of dollars worth of everybody I mentioned, and then some more. And so that's really what's going on here. So it could take 15, 20 years, to clean this mess up. You got to figure we've just gone through what, 13 years, and the tapering is no more closer now than it was 11 years ago. So I mean, we could be 20 years, and the Fed could be more tapering depending on the growth of the economy, because that was part of Bernanke. If you go and read Bernanke's PhD thesis, that's part of it. You have this big long portfolio. You're willing to be invested in it for a long, long, long time, but if the economies turn around and start to grow out of it, which they're supposed to do, that's what Bernanke's PhD thesis says. Is theory, and he theorizes that if they would only have those, hidden portfolios holding on to all those assets, that'll grow out of it, and over time you can liquidate a little here and a little there, and before you know it, the Federal Reserve gets its money back, makes money on it, because remember, it's legally allowed to make money. It's like the CIA. Both the CIA and the Federal Reserve are written under the same identical codes. So, in other words, they're legalized by the U.S. government that they're both allowed to make a profit. So that's why the CIA owns like banks and airlines and all kinds of things. And same thing here is the Fed can do the same exact thing. They can own bonds and stocks and everything else they want, and not have to answer to anybody. That's why they refused the audit. People kind of forget about that. Remember that when the Republicans tried to audit them in 2000, I guess it was, 2012, something like that. 2010, they refused. It was 2010. They refused to audit. People in Congress wanted to know, what are they invested in? And the Federal Reserve said, forget about it. Like the way the mob says that up in North Jersey. Forget about it. So I'm sitting on my hands waiting for both weeklies. Yeah, well, your fingers may get numb, because I am there with you, and I can tell you my fingers are already numb. And so, yeah, the chances, I'm sure the Fed will allow it to go up for a little bit just for the fun of it, just to appease the longs on some level, and then they'll fall back again. I was saying that, who was I saying that to? Was I saying it in a webinar? I was saying it somewhere recently, like in the last 5 trading days. I think I did it in the webinar like last Friday or Thursday. I was saying gold, its all-time high is 2,000. It ran up there, and then it went to like 2,100 a second time after 10 years after losing 50% in value. And then here we are sitting at 1,800. So I mean, they're not exactly letting these things. Look at silver, 26, 27 bucks an ounce. All-time high is 51. That thing's almost 50% off its all-time high still. Let's see, U.S. government banned M2 money supply info. Yeah. Well, M2 shows where money is parked, so they're hiding where they park it. Margin leverage got rid of. Binary options got rid of. CFDs. Let's see, what's that? Banning put options under the new FX Global Code, limiting short selling soon. I don't think they'll limit short selling. What they'll do is they'll just increase the margin. That's the way they do everything. They just make it more expensive so that only the major players can do these things. But yeah, it's we are in an era. Look, as long as there's long as there's cryptocurrencies, crypto assets, there's going to be a QE and vice versa. So when you start to see the QE starting to disappear, then you'll probably start to see the crypto start. First they'll pop, and then they'll fall, and then they'll keep on falling, but not until. So as long as there's a QE, there's going to be a firm average in, dollar cost average in, QE. Not QE, cryptos. Just keep on dollar averaging them in. My sons, they've been buying this stuff for a long time. They know my math. They're very good at it. And you know, one of them was like, I just bought more Bitcoin, you know, in the 40s, in the 30s. It's like, yeah, what's the difference? Just keep on buying it. Because it's just going to go up sooner or later. Matter of fact, someone said yesterday, a good analyst, someone that's actually respected, said that if Amazon actually started to take payment in crypto, that they see Bitcoin at $100,000. They think it would run, you know, it would triple in price. They said 100,000. That's basically saying it's tripling, because it was at 30 that morning, 35, and then it went to 39, and now I think, let's see where it's at now. There's the July contract. Are they updating it? Yeah, they are. It's still up. It seems a little odd there, but now how did they changed the opening and everything on the Monday? I hate when they do that. But look at the weekly. The weekly is looking very, very, very strong. Looking very, 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 very strong. And so that's the action that we see there. What is the stock market doing? Stock market is, let's do it on the shorter one. I like it better that way. I'm heading there now. Right there. And, oh, we should go back to some of the other currencies. What was I looking at? Oh, I wanted to look at these guys. So the Dow is down 118 now. Nasdaq, or the Tech 100 that's on Dukascopy, is down 11. And the S&Ps are down 10. So it's not exactly falling apart in any particular fashion. Let me think. Right there. There we go. Let's see. Middle age says, can't see, Doc. Can you see it now? Right there. There we are. Let's see. Alan says, crypto means no income tax. No, they seem to. No, they're charging income tax here. They treat it as capital gains on a short-term investment. There's income tax on it. Maybe in Australia there isn't, but in the United States there is. And they got their fingers into so many things. They can tell when something is, you know, they look at the increments. The central banks are totally running the whole world now. Financially, that is. Now, let's see, where do we go from here? I know what I want to do. I want to look at the, like, ruble and South African rand and so forth. Let's go over to that. Not there, but, yeah, maybe it was there. Why am I not seeing these things sometimes? There it is right there. So let's see what the ruble's doing. Ruble pushed into that sell a few days back. It's trying to lift back up, but it's got no real strength. At the same time, we're in that weekly buy, and it won't go up. Very interesting. If I buy items in crypto, no VAX, no GST, no tax, why not? Don't they charge VAX? I mean, they're going to convert. Look, first of all, they're going to convert the crypto into what the Aussie is, and then sell you whatever they're selling. So they'll just charge a tax. They don't charge tax on purchases to the seller or the buyer. I guess it's the buyer, right? You're saying because they can't track you. Well, on small items, I'm sure they're not going to. So I guess in some ways, but doesn't it come down to the company to report you to begin with? I mean, if they're trying to lock you up for COVID, you got to figure they're watching your bank accounts and everything else. You'd had to take money out to buy it, so they know that you own it. Somehow or another, they can actually follow that stuff. Kind of defeats the crypto on some level. There's the ruble. Let's take a look at the South African rand. Right there. still trying to be firm and up, and gold is going up. This should be going down. This has to be Mr. Zuma doing all this at this point. And then we go over and we take a look at the Mexican peso. Where is it? Breakdown. Peso starting to break down. We're in a daily sell for 3 days and finally making a low. This bothers me because the weekly's doing its weekly trick there. We'll see how that plays out. They regard crypto as a barter trade. Cool. Yeah, here in the States, they consider it like an asset, a short-term asset. So when you sell it, they want capital gains from it. If you made money on it. I would, and, you know, our system is set up so you barely can take a loss anyway. I mean, you can lean it up against gains, but you can't, you know, it's a very small increment overall when it comes to net outright $3,000. So now, let's see, where else are we? I guess we're coming to the end. Anybody want to see anything before we get out of here? Soybeans, yeah. You know, middle-aged, what was that? It was the one I said I thought was the best. I thought of you this morning because check this out. Let me just close this. And might as well close the stock one. Now that the webinar is pretty much done. And then, check this out. Did I do that? I think they did. Let's see. Right there. Look at the cattle. I guess that's all because of the China problem. Looks like the magnetic field on that side of the planet's having some real issues too. There's soybeans, and they're acting pretty firm here. And then you can see second day in a daily buy. And then, and let's see, then look at wheat and corn. There's corn. Oh, okay, now it's starting to perk up. This morning it was literally flat. Now it's showing some life in it, but you can see it's not moving up, but the weekly is. That's why I chose soybeans yesterday when I said to you, if you're going to trade anything, trade the soybeans. And instant gratification, is that crazy or what? It was a simple deduction. It was like Sherlock Holmes. I mean, I see the strength in the way it's acting in soybean, and I'm not seeing the strength in the math in everything else. So it wasn't that much of a no-brainer. That's why I said, go soybean, go soybean, go soybean, go. Let's see. Tommy says they go. Okay, Middle East says soybeans, wheat. Okay, so I've answered all the questions. All right, this is cool. All right, so we're out of here. We will catch everybody tomorrow on Happy Hump Day. So happy trails to you until we meet again. Happy trails to you, to all our Dukascopy trading friends. Ta-ta for now, traders.